Welcome all. This is Dara Panahi. I'm a partner at Milbank LLP and will be moderating this panel today from Washington, D.C. I'm very pleased to welcome you to the ninth of GVF's acclaimed webinars, organized in association with Satellite Evolution, with the support of my firm, Milbank. Milbank is a global law firm with offices through most continents. We are a full-service law firm, and we, among other things, engage in the support of the space satellite and connectivity sectors with a dedicated group of lawyers that focus on finance, commercial, corporate, insurance, and regulatory matters. And I co-lead that practice out of Washington, but we have a team of 10 strong and very pleased with the opportunity to work with GVF and Satellite Evolution to put together this webinar for you today. And with that, I'd like to introduce our panelists. First, Chris Quilty, founder and partner at Quilty Analytics. It's a boutique dedicated to research, strategy, and investment banking for the space and satellite ecosystem. Prior to establishing Quilty Analytics, Chris was a sell-side research analyst at Raymond James for 20 years, and he published hundreds of specific macro sector thematic research reports on various aspects of the industry, including defense, space, wireless, and communications aspects. Next, we have John Apostolidis. John is an investment banker at Melody Investment Advisors. He's got over 17 years of experience as an investor and investment merchant banker, with prior experience at Macquarie Capital, where he led advisory investing and capital raising efforts. Before that, at Evercore's corporate advisory business, and prior to that, at Citigroup. And we have Mark Boggett. Mark is the CEO of Seraphim Capital, London-based venture firm managing over the $90 million Seraphim Space Fund, which is backed by a range of leading space corporates such as Airbus, SES, and Telespazio, seeking investments in various space-related startups. It's also a pleasure to note that a member of an investee of Seraphim, QuadSat, is actually a member of GVF. Mark is also director of the Seraphim Space Camp, which is an accelerator backed by Rolls-Royce, the STL, and Marsat, the European Space Agency, and the UK Space Agency. Mark has a prior set of stints in equity and investing on various boards and activities. And so with that, here we are as the panelists. Good morning, good afternoon. So today we're examining the question of whether the satellite connectivity industry or specific sectors within this industry are at some financial crossroads, or if the several instances of actors we've seen recently seeking to restructure or rework their balance sheets are isolated examples of what is otherwise an industry in relatively good health. I think as you all know, and as many of our audience know, financing of space-related businesses, and particularly the space segment aspect of it, is quite different from other businesses. It is unique in some senses and sometimes strange. Involves generally a large upfront investment of capital before any revenues can be realized. It requires a management of complex and sometimes arcane regulatory and policy issues, including spectrum, regulation, national security matters. There's also the layering of insurance, dual-use technologies, and increasingly responsibilities for maintaining space sustainability with respect to assets and objects that are placed into orbit or in space. So it requires a fair bit of dedicated know-how, nuance, and structuring. Layering on this, we have the COVID-19 pandemic and its micro and macro impacts, which adds another dimension of challenge and complexity to our industry. So with that, let's jump in. As we foreshadowed a little bit, we have a few industry actors: Intelsat, OneWeb, Speedcast, LeoSat, Phaser, some notables who have been in bankruptcies or restructurings, and looking at what's been going on in the past 6 years of the industry. Are these symptoms of a fundamental issue regarding financial markets, regarding access to capital, regarding our industry, or is it something else? And with that, let's jump first to Chris Quilty and get his views on it.
Well, I think obviously when you hear a long list of names like that, you might logically conclude that there are fundamental issues. But I think in most cases, you have to take each of these companies and their specific circumstances, from the list that you provided, they range from companies in the services side, satellite operators. It's a diverse mix. And so I'll just say in general, no, I don't think there are fundamental issues with the industry, but certainly when COVID-19 hit, it stressed the industry and those actors that were most at risk, and that's what showed.
Thank you for that, Chris. Mark, from the investee side, and I know that there are obviously different kinds of horses and courses in terms of companies and activities in the industry. What have you seen as regards the ability to raise capital, as well as the liquidity and interest in continuing to deploy that capital in the companies that Seraphim looks at? Mark, sorry, you. I believe you're muted.
There we go. Okay. Yeah, so to our surprise, COVID has not suppressed the appetite of investors, or certainly venture investors. We run a quarterly publication that we call the Seraphim Space Index, which tracks global VC investment into the space tech domain. So I've got some stats here for you. So the quarter to the 30th of June 2020 versus the same quarter in 2019 saw investment actually increase during the last quarter. So early stage particularly, so seed investment was up 73%, A series up 56%, B series up 35%, while growth stage investments were down by just 1%. And if you look at the sort of rolling year, so the year-on-year position, it's similar. Seed up 172%, A series up 21%, B 55%, with C series showing a massive five-fold increase, whilst the overall, the rest of the growth investors down by just 2%. So we've seen the market both in Q1 and Q2 being very robust, and that investor appetite remains. Whilst we're not yet at the end of the current quarter, ahead of today's session, I just looked through some of the numbers, and from an investment perspective, this quarter is shaping up for record numbers. So it's really interesting to see that COVID really hasn't impacted the appetite of investors to come into this market.
Thank you, Mark. Both it's interesting, and it seems a bit counterintuitive to what we just started the theme of this question on. And on that exact note, John, I know that companies that you have spent many years following have been doing, again, somewhat counterintuitive things. So we have read in the news that Intelsat has announced an intention to acquire GoGo, a company in bankruptcy, looking to acquire a company that has had its own challenges and successes, by the way, and apparently a bid to create a new efficiency and vertical within the market. Would love to get your views on what you see in that potential combination and the rationale behind it.
Happy to, Dara, and I agree very much with some of the points that Chris made and some that Mark made. I think I would add, before addressing that question, I think this is a sector that is in a turbulent time. I think it's a time of change. The initial question that you pose, and then some of the things, particularly that Mark is saying, there's an optimism, I think, for certainly seems to be on the growth and venture side, that says we need change in the sector. And I think that's a result of a lot of what's happening. So when you look at Intelsat and Speedcast and Phaser and GoGo that you've pointed out, many of these companies have had, and others, some of their peers, have had issues with what exactly is the business case? What exactly is the total addressable market? The cyclicality of our end users, and something that we look at from an investment perspective, the credit quality. And when you look at all of that, and then you look at the capacity, the supply, the demand, it didn't all fit. And now you're looking, I think, at a layer of, well, gosh, there's services and there's capacity, and there's infrastructure and services, and it's starting to really blend together. And that's what you're seeing with Intelsat and GoGo. Our prediction, our team's prediction, and it's from the other friends in the sector, is that we'll probably see more of this, because it will be really the synergies will be quite impactful. It'll the demand and supply will start to converge. But for the foreseeable future, at least my personal view, I think it's going to be we'll probably see more a little bit more carnage in the sector, at least from some of the big players.
Thank you, John. Chris, going back to you, prior to COVID, there had been a leading period of, I think, maybe 3-4 years, starting with the concerns regarding legacy satellite broadcast services and a waning market, or at least a softness in the market in terms of the pricing and demand dynamics. There's also been discussion for years about the need for consolidation, too many operators, perhaps ill-defined services, not a efficient transition to the quote unquote digitization and iPhoneization of the industry. So do you agree with John's view that we'll see, I won't call it carnage, but maybe more creative destruction, more M&A, and perhaps some of it driven by either the reality or the perceptions that have arisen as a result of COVID, which may have been an accelerator for an existing trend?
Yeah, I think your original implication that this is a long-seated problem is probably more accurate than it's COVID related. I think the fundamental issues that the SATCOM industry is dealing with is both a fundamental change in technology as well as a change in demand. On the technology side, there's really two factors at play. One is on the data side of the market, the evolution or revolution in high throughput satellites, which are pretty quickly obsoleting satellites that have a long operating life, but not a very functional life in terms of a wide beam capacity satellite. If that weren't problem enough, they're dealing with another sea change, which is the emergence of these LEO broadband constellations. You throw those two factors together and you've seen a bit of paralysis on the CapEx spending side, I think rightfully so, with the satellite operators as they gauge what's the correct technology path. And add to that, your question to John just a moment ago about distribution channels. This was historically, it was a very well organized, sort of wholesale driven model. Everybody was comfortable and everybody played by the same rules. And that historic model is breaking apart in front of our eyes. And it really started on the fringes of a part of the industry that the SATCOM operators did not really care about, which was the consumer market. And the two companies that were principally involved there, Viasat and EchoStar, you've seen Viasat take that technology with the Viasat series satellites and move directly into a vertical model in IFC specifically. And they didn't come with any of the historic baggage of a distribution model that they had to adhere to. And of course, Inmarsat has done the same. SES has started to bend their model towards more direct, and now you've got, the wrap up here, which is the Intelsat Gogo tie-up. So we're in the midst of some pretty significant change. It's not exactly clear how it's going to play out through different distribution models, and the technology landscape, I would say, is still unsettled. If you want to look at the big picture, does GEO win or LEO win is one direction that people want to question. And you've also got KA versus KU. You've got distribution models. So it's for people like myself that get to prognosticate on these things.
Thank you, Chris. We'll soon hop into the discussion about GEO, MEO, LEO, and other architectures. But before we do that, Mark, I think we all agree that we are in a period of evolution, change, and disruption. And I think certainly for VC and investors, that tends to portend well, because that's when you have new, previously not available, disruptive, innovative industries pop up, ideas pop up that shake the firmament of how things were done in the past. And particularly as we are seeing more of a consumer focus in this industry, how has that in the past year or so impacted your investment activities, the fund's investment activities? And are you seeing any trends as regards either the acceleration or the interest, not so much just by the investors, but essentially the emergence of new kinds of companies in the various sectors, not obviously just in the connectivity piece of it, but there's many other sectors that we haven't mentioned, whether it's Earth observation or asset tracking, or a multitude of other end user type applications that can be enabled from space.
Yeah. So one of the key new entrants in the space market from the investor perspective are corporates. So there's the traditional corporates whose markets are being disrupted, and what we're seeing is an acceleration of an acknowledgement that this change is here to stay, and that the incumbents need to find a way in order to be able to work with this new cadre of startups that are in the market. So you're seeing growth in the numbers of accelerators, you're seeing growth in the number of the corporate venture funds that the traditional space and defense companies are establishing in order to find ways to engage with this new market and to break through the sort of not invented here that many of the larger companies are facing. And then at the same time, you're seeing corporate investment from other sectors, the sectors that work with space, the mobility sectors and the technology sectors associated with telecommunications, where there's been a massive amount of investment from the corporate community, being one of the key drivers for the growth investment in this market. So I believe that what we're seeing over the course of 2020 so far is a bit of a slowdown from the corporate investors in the market, whilst the institutional and VC investors are still very much willing to take the risk. I think that there's been a reduction of risk appetite from the corporate investors, but that's not the same as the risk appetite and lack of engagement through the incumbent corporate players in the market, who I think are increasing their engagement with the startups and the various different subsectors of the market.
So in a sense, if I'm understanding this right, there's sort of this class of quasi-strategic / investors that have a particular insight into the benefits of the disruptive technologies, and they have not been deterred. There may be general corporate investment that seems to have waned, but at the other hand, it seems that based on the other numbers you were sharing, that on a net basis, we're looking at a record or bumper year, and that's very encouraging.
Yeah, so I think that sort of growth is stable. Whereas the earlier stage has still got massive amounts of continued interest from a broader and increasingly broader range of investments. So yeah, that's absolutely the case.
Thank you, Mark. So let's delve a little bit into the issue that Chris introduced, I think, a little bit, the differentiations in architecture, and by that I mean the GEO, MEO, and LEO architectures, companies, service providers out there, the current trend, or let's say significant investment ongoing in the development and evolution of LEO constellations for various applications. By the way, for better or worse, much of the press coverage goes into the connectivity players, but there are other LEO systems being developed out there that are for Earth observation, for messaging, for asset tracking, and a multitude of other applications. So in sense of the differentiation by application or end use, how do you see that as a input or characteristic of what investors look for? And are investors able to differentiate between the different applications? And is there a clear understanding between, what a ORBCOMM versus an Intelsat versus a Telesat LEO or a OneWeb or an Amazon Kuiper will do? Are those differentiations clear, as well as what each of those systems is either better suited to do, capable of doing, or maybe better suited in the not too distant future to do as part of a hybrid network? Why don't we hop to John on this one first?
Sure, happy to take that one, Dara. I think when looking at any of those architectures and the type of we're looking at whether it's GEO, MEO, or LEO, we look at it from a is this an infrastructure sort of play? Given our lens and having seen others look at this as well. And then if you're going to look at it from an infrastructure perspective, whether one would argue that GEO and MEO might be better served for a few reasons. One is they tend to be longer lived assets, the actual structures in the sky themselves, and hence the counterparties tend to sign longer contracts with one another. Now, we've talked a little bit about the supply and demand earlier as well. And so there's a little bit of, is there too much supply? Is there not enough demand? What's happening to pricing? And as the market becomes rationalized thinking for GEO and MEO, starting with those, and there's less players, there's more consolidation. This actually may be a good thing. And so, with less players, less, let's say, in-flight connectivity players that are kind of on their own, less, constellations being built or replenished with high throughput or other things, that could be very helpful. But again, we're looking at that lens from a infrastructure, longer term credit quality lens. It's important to look at that way. And then there's also just the amount of data that can be mined from these streams, which people still haven't really been able to do or done. From a LEO perspective, there's an awful lot of hype around that. Personally speaking, I remain a bit skeptical around that whole ecosystem. I think you see some of these numbers, some of the personalities around there, some of the alliances that have been formed. And then there's the use cases. Is it going to be a replacement to terrestrial communications? Is the amount of money that's being invested really justifying remote communications, however that's defined, in where 99% of the population isn't, and things are spread out. And then the last is what are the use cases for Internet of Things, which I think is a fantastic debate to have on its own. So these are just some of the things that at least I think about, our team thinks about, I know others think about when you think about infrastructure and services for those kind of three classifications.
Thank you very much, John. So Chris, I know without obviously getting into specific companies or players, you have combed through many of the business cases for both the, what I'll call the legacy GEO/MEO operators and the emerging and existing LEO operators. Let's get to John's point, because at the end of the day, this is what matters is revenue generation. What matters is cash flow. What matters is being able to provide a service that people will pay a fair price, which is sufficient to sustain and grow the business. In terms of those metrics, what are your views? Again, don't have to get specific, as to both the future prospects of our legacy GEO players and actors in the market, LEO players, and MEO, I think you can put in sort of a quasi bucket, because we have GEO operators that have diversified into MEO. You have maybe LEO constellations that are already talking about diversifying into MEO. So you can park that one wherever you'd like.
Yeah, so interestingly enough, or despairingly enough, I think many investors just don't have a great appreciation for the differences in an orbit, a LEO versus a GEO versus a MEO. What they're looking at more is what's presented as a disruptive business case and a capability that's promised more than an architecture that people in the space industry get excited about. But for an investor, they're trying to understand the business model of why this architecture makes sense. What are the risks associated with it, and what are the potential benefits over what exists today? And you really have to bucket these things out by application, whether it's communications versus Earth observation, whether it's a big LEO broadband a la Telesat, SpaceX, Amazon, or whether it's a small, more focused IoT constellation. If you asked me in the past, I would have said there's a much higher probability of those smaller focused constellations getting to orbit and perhaps having success, in part because of the lower CapEx hurdles. In fact, if you asked me 5 years ago, when SpaceX and Greg Weiler at OneWeb first started to surface the idea of these big LEO broadbands, I think I wrote at the time that I doubt any of these will get off the ground, primarily because of the funding hurdles. And what we've seen now is we just published a report a couple of weeks ago, and we said, in fact, we now think there will be at least 3 of the big LEO broadbands. OneWeb, which is backed by the UK government, and Amazon and SpaceX, all 3 basically sovereign entities in terms of their funding capability. And in that case, the rationale for those business cases are now being driven by, things other than what I would normally say is a normal commercial business case. And unfortunately, Telesat, as a company that has a very solid architectural design, is bound by the normal law of economics and return that their competitors are not. So that's a big change from where I would have stood years ago. Now, that said, I still do think there are lots of promising capabilities, either on the Earth observation or IoT or other communications plays. Many of those companies are moving into the Series A, Series B funding rounds that are getting them towards more sustainable funding. And I think that's going to be a really interesting area to watch in the next couple of years.
Yeah. Can I add a bit more to that, Dara, if I may? We've been very carefully studying the global LEO constellation market recently. I've got some statistics to share there with you. So there are 180 companies globally that are planning small sat constellations, but interestingly, a third of them have already got satellites in orbit. So there's been a massive spike in the number of companies reaching orbit for the first time in the last 2 years. 20 companies in the year 18 and 20 companies in the year 19. And that's versus an average of only 4 companies per year in the years 15, 16 and 17. So likewise, there's been a huge increase in the number of companies launching at least one satellite. 40 companies in the year 18 and 40 companies in the year 19 versus an average of 7 in 15, 16, 17. So of the 180 companies that we've looked at, half of them are Earth observation, and about a third of those in total are for optical. So things like SAR and multispectral, RF and IR, there's a growing number of companies that are looking at the different use cases associated with that. The other half is being SATCOMs, laser comms, and other specialist areas. So it really is Earth observation that's driving this, whereas most of the press coverage is all about the LEO broadband players. So we find that investors really don't have an understanding of what's involved with the other constellations and what are what markets are they looking to address.
Thank you, Mark. Before we go back, because I think you raised a couple of interesting points regarding the quote sort of whales of the industry, perceptionally, at least in LEO broadband. Given your particular approach in terms of investees, are there particular new technologies that you find, enabling technologies, I should say, you find that you think are truly disruptive and interesting? And do you also have any industries, any technology you've seen that are overhyped and, not particularly useful for the future of any of these verticals we're talking about?
Yeah, so I think the disruptors are going to get disrupted. The pace of change in this market is quite incredible. And the big LEO broadband constellations we were just talking about there, where billions have been invested, they still need to build the ground-based infrastructure to actually deliver their product. So we're excited about technologies that provide SATCOM direct to mobile phone, where there is no ground-based infrastructure that needs to be established, and the capability of being able to reach the rest of the world that happen to have a mobile phone in the pocket from space with no hardware, no software, additional requirements. So there's a limited number of companies that are doing that. We're backers of one called AST and Science, which I think is a name that people will hear a lot about soon. So we're excited about disrupting the disruptors. In terms of overhype, it's sad to say, I would say small sat launches is the overhype. This is where so much money has been poured into, and frankly, we can't work out the business case for most of them in terms of the dynamics of the market. So for me, the overhype is really about small sat launch. The overlooked for me is around what we call downlink, getting the data from space back down to ground and doing that in a cyber secure manner. So that's one of the least well funded by the venture community subsectors. That entire sector, as we refer to as the downlink, only takes on average about 2% of the total investment in any one particular year. So we think that that's an underinvested but massive investment opportunity, because once these constellations start to appear, we're going to need to have the necessary infrastructure to be able to move this massive amount of data and to be able to analyze it and make use of it, get the insights in real time.
So Chris, coming back to you, you mentioned essentially the analysis and let's call it prognostication of potential winners in the LEO broadband market without getting into sort of winners and losers. The question I think more broadly is that, is there a path for profitability, long-term profitability for the LEO broadband providers? Are they really able on a standalone basis, whether one or all of them, make a long-term business case out of using that architecture for broadband connectivity, or is it a step to a hybrid or different architecture that on a wireless satellite platform base would ultimately succeed?
Yeah, so setting aside the technical and operational challenges that these companies face, one big question that I don't think has been fully answered is, if the wholesale revenues for Satcom, globally are around 6 billion, and you run the numbers on the cost of these constellations, and the conclusion you come to is the entire existing Satcom wholesale revenues are not sufficient to close that business model. So even if they were to consume half of what is the existing industry, they've got to go find a lot of incremental revenues. Now, that could come from a number of sources. It could be the growth of current markets, like the mobility markets that have been one of the primary growth drivers in recent years. But the conclusion you're left with is they have to either create new markets. These are, say, on the consumer side, as SpaceX and Amazon are doing, and finding consumers that are not connected, or you have to go take revenues from the existing terrestrial service providers. And that, again, if we looked in a historical context, satellite has always been the option of last resort. Now, when you look at the architecture of these broadband constellations, you can make arguments around the amount of capacity, the latency, and other things where you can theoretically make that argument. But certainly it hasn't been proven yet, and you can bet that existing terrestrial providers are not going to sit back and just allow that business to go away. So I would just also note, I mean, that's just macro on the business model. The technical issues, as it turns out, the rocket science is the easy part of this. I think John talked about it before. Building and launching satellites is not the challenge here. The real challenge is on the ground side. And most specifically, it's on the flat panel antennas. You need an electronically steered multi-beam antenna in order to close the link with these satellites. And certainly if you're going after the consumer, you need a very low cost one. And I think that is going to be the biggest technical challenge, and also becomes a business challenge when you look at the subsidies that are going to be required. If you look at Viasat and EchoStar even today, half of their CapEx that they're spending is not building satellites, it's subsidizing the ground equipment. So that's a big chunk of CapEx spending outside of what's already a very expensive, called $10 billion investment in the space infrastructure.
Thank you, Chris. Again, a reminder to the audience, please use the Q&A button and not the chat button to submit questions, and we'll get to some shortly. John, I know that you in particular have focused on some verticals in the industry, including in-flight connectivity, and as well all of the various value-added resales into various verticals, whether it be maritime, mobility, oil and gas, et cetera. I think we all tend to agree that the rubber really meets the road on the terrestrial and end user elements of the industry. Any insights you can share there about what may enable or what may be a detriment to the success of LEO architectures, as well as maybe some musings on where IFC is going or maybe going, given the current sort of some mini pause in the volume of air traffic consumers?
Oh, look, all great questions. I echo Chris's comments. I mean, the cost for the ground equipment and base stations and everything else for LEOs is quite substantial, and that's going to be a challenge. As you think about populations where you see anywhere between 80 and 90% of the terrestrial population is on 10 to 15% of land mass, that's a challenge. Lining up the actual proper ground stations with the LEO equipment and the birds and the to phones themselves. That's a fascinating, potential, next step, and they have attempted to do that, and it's a very, I think a very noble and very, worthwhile, effort to do, but it's difficult. From an in-flight connectivity and services perspective, and things like that, in-flight will recover. I think everybody feels that. It's just more of a matter of when, not if. But at one point there were 8, 9, 10 sort of IFC providers, and it probably became providers were actually buying inclined orbit birds when the price of capacity and the price per gigahertz was going down by 90% over a 5 or 6 year period, and we're doing some uneconomical things. There were also a lot of companies were growing inorganically. Well, there became a time, quite frankly, where roll-ups just couldn't happen anymore. And so over time, I think a rationalization of the supply and the demand and the use cases will make sense, but there is room for disruptive cases, disruptive technologies. So I guess what I'm saying at is it still seems pretty uncertain. I do believe that GEOs and MEOs have a place for the things. Again, they to somewhat to Chris's point, reduce the cost of the ground stations for LEOs. So it's going to be a very interesting 3 to 5 year period. The one thing I would add is I actually am bullish on launches, because I think a lot of birds and equipment is going to be launched in the sky, but I don't necessarily think they're going to succeed long term.
Thank you very much, John. I'm going to just jump to a few questions we've got from the audience, and I'll direct them. First question, an interesting one from Nick Oswald in London, about finance markets' interest in companies that are specifically looking at green technology development, whether it's less pollutive launch options, whether it's more responsible end-of-life disposal technologies, or elements that go into spacecraft that will have an easier, if you will, or less of an impact in the space environment. Maybe I'll hop over to Mark on that and seeing sort of how much of a green sheen have you seen in terms of the investments that you're looking at?
Yeah, so in my experience today, even the most sophisticated investors that really have a strong focus on ESG have not yet really started to think through the opportunities within space and how that can provide climate and impact benefits. So I think it's down on us as the investors in this market to provide this education. I spend a lot of the time doing that to bring other people into the market to invest in the infrastructure that will enable the space to help the UK from a climate challenge perspective. So it's rare that I've got investors that are specifically talking about things like debris in space. Well, we, as an investor ourselves, have been taking positions in companies that can address these problems. We've got two in particular. Leo Labs is one of our portfolio companies that's monitoring this activity in space, monitors debris down to a 2 centimeter level, covering about 250,000 pieces of debris to provide a real fidelity of what's going on in space. I think that as more and more of companies become aware of this issue, that it's going to lead to regulation being focused on addressing it, and that will lead to more companies being sort of focused on this area. But right now, from an investor perspective, it's not really a driver for looking for space-related companies that have got a sort of a green agenda. But I believe that that's a trend that will increase over time.
Thank you, Mark. A question, this one's going to go to Chris, apropos to your comment on launchers. A question from Yashas Karanam. He's asking whether really any other sat launch company can beat SpaceX's current frequency and pricing of kilograms to orbit. And he mentions a 1 million to 200 kilograms price tag. I think there's a little bit of variability, obviously, in that price tag. But One, can anybody beat it? And really, where is the demand for small sat launchers sufficient to make the ones out there that are aspiring profitable?
Yeah, thanks for the loaded question. I mean, I'll just be honest. I mean, it's pretty hard looking across the industry landscape to find anyone that's nipping on SpaceX's toes. The numbers are the numbers. I mean, they've got the lowest launch cost per kilogram. They've been one of the better performing companies in terms of their launch tempo. That's only improving as they're doing reusability. And yeah, I mean, if you believe the numbers that Elon has mentioned on the Starship Super Heavy combo, not only would it be disruptive, highly disruptive on the launch side of the industry, but in fact, it would fundamentally change the way that you think about launching things into space. You got you got a big diameter in terms of the size of things that you can put up. It's interesting. I was talking with a satellite executive the other day that was designing a satellite, had been in this business for, I think he said 20 years. And he was talking with the engineers on a design trade-off with the satellite, basically a price versus performance and mass being price. And he said he realized, I said to the engineer, I'm like, fine, throw on another 2 kilograms if we can get a little bit better performance. And that's something I've never said in my life before, but the cost of launch has changed to the point where it's allowing us to design things differently. Look, I do see the other launch providers making, I think, all too slow attempts to adjust their designs and their business models. You know, when you look at the small launch business, I think there is a niche there. It's, you know, there are still lots of companies that will need timely response to get things to orbit. And even if SpaceX is launching once a quarter and you can get a ride share, there's always going to be companies that are going to want or need that dedicated launch. But let's be honest with ourselves. Dedicated small sat launch has never existed in this industry. You know, the US Department of Defense, you know, has a whole bunch of hand waving and trying to subsidize companies in the small launch business to maintain this capability. But the capability has never previously existed. So, you know, where the justification comes from, I kind of, you know, scratch your head on it. I think it will be important on a go forward basis, especially as we move away from some of the large GEO towards MEO architecture. But, you know, the one thing I would ask, if anybody has a good solution on, is where are all these launchers going to launch from? Because spaceports are tricky. You know, you shut down air traffic, you have to be located in the right location. Just saw a not so fun video yesterday of a toxic plume in China as first stages were landing downrange by a school. The range issue is not something I've heard anybody really try to directly involve. And you know, I think it's great that here in the US, Cape Canaveral is really tooling up from, I think in the last decade, the most launches were like 24 a year, and they say they've now got the capacity to do 48. But that leaves no room for 3 dozen small launch companies and SpaceX and ULA and Northrop to all operate, you know, out of the same launch site.
Thank you, Chris. So,
can I
John,
just add something there?
Yeah, go ahead, Mark.
I was going to say one of the things that we've been closely looking at in this market around pricing strategies for accessing space is an extension of the rideshare market, which is space taxis. So rockets that go inside rockets, and then once launched into orbit, they go and deliver their cargo to specific orbits like a taxi. So there's a few companies out there that are doing that already, or are establishing themselves to do that. Companies like Momentus and Deorbit. And I think that is you know, a low cost solution for providing exactly what some of the constellations require, which is the benefit of a specific orbital launch slot. So that's a trend that we see will continue over the next few years.
Yeah, and that's a very good point in a sense, enabling the shared launch paradigm, if you will, with ancillary support, because that's frankly one of the key issues for shared launches has been that you might get a relatively cheap ride, but you're not getting it to the orbit you need because you're not the primary payload, and so you need to get from point B to C before you can land to where you're in a useful orbit, and that's going to be a very important enabling technology, as will be in orbit repair, in orbit servicing, which I think sounds like science fiction today, but maybe not so in the not so distant future. So John, starting with you, a quick question. It's a fill in the blank one. You would jump at the opportunity to invest in blank. And it can be a company, technology, but you jump at the opportunity to invest in blank.
I'm gonna soften my answer a little bit. I am intrigued by satellite refueling. I think there is an ESG component to that, which is something that when we invest in terrestrial communications has become very important. You look at data centers, you look at towers. So I think that one's a very interesting one. I think over time, I'm not going to go as far as asteroid mining for minerals, although I think it's interesting as well. But I think space cleaning and debris removal. So again, it's coming from an ESG perspective. I think will be very interesting. And again, is it from a personal account? Is it a private equity account? Is it an infrastructure account? You have to look at that. But so I wanted to qualify all that. But I think those are some areas of interest.
Thank you. Over to you, Chris. Invest in blank.
Weather. I think weather is one of the most underinvested places in this industry. It impacts obviously every aspect of our life and industry. The unfortunate fact that NOAA and other weather agencies give the data away for free has historically been an inhibitor to investors. But let's be honest, I'm not always so happy with my weather report. And I think if I imagined an alternative universe where the government never got involved in building weather satellites, I think there would be a dozen or dozens of companies building weather instruments and providing data that is 100 times better than what we're getting from our government benefactors today.
Interesting. Weather. Agree that many of us are still frustrated at the efficacy of weather forecasting, especially if it's more than 12 hours in advance of something. Mark, you would jump at the opportunity to invest in blank.
Right. Okay. It's a little bit more difficult for me to answer this one, given that across our initiatives, we've got a portfolio of 50 companies in the space tech arena. Just picking up on what we talked about earlier with the low-cost flat panel antenna market. There is a requirement for a solution here. There's billions that are being invested into the LEO broadband market, but there isn't a solution for the ground. So right now, that would be a focus for us to invest into the lowest cost flat panel antenna manufacturer.
Terrific, thank you. I'm going to take an anonymous audience question and turn it into a true-false one. In the next 6 months, let's make it 12 months, we'll have a telco MNO acquire a satellite services provider as part of their 5G rollout. Starting with Chris, true or false?
False.
John?
False.
And Mark?
True.
Thank you. I appreciate the diverging view. Going into investments a little bit more, and I think hopefully something that the audience will be very interested in. All of you have been in a position to either coach, advise, assist companies that are looking to raise financing. What's the single most important piece of advice or guidance that in your mind you'd give to such companies? And since John is already looking excited, why don't we have him go first?
I think it's to continue to pardon the pun a little bit, to reach for the stars, because I think a lot of people who are raising capital early on, pre A rounds, B rounds, C rounds, they wouldn't be where they are without be realistic about what you're looking for, and be realistic about what you're looking for from a cost of capital, from an ownership perspective, from a leverage perspective, putting debt on the business early on, later on, what have you, and think about who your customers and end users are going to be. I cannot stress the end user case and customer case enough. That's been one of and some of the most difficult conversations I've had, whether I was an investment banker or today as an investor.
Thank you, John. Mark, how about you?
Yeah, so we've sort of taken it as read that they've got big ambition and that there is a market and that they've got the technology. Otherwise we wouldn't be speaking to them. So it's then for us about the entrepreneurs really knowing their subject, being credible, and importantly showing their passion. Because at the stage that we're investing in, we're still investing into people and their vision and their ability to be able to deliver that. So that means having an in-depth understanding of their competitive positioning, their market, their financials, and the basis of assumptions on all of those. We're seriously going to put those to the test. So as a specialist investor in the sector, we might have greater knowledge of the emerging competition. But when an entrepreneur really lacks rudimental knowledge about the other competitors within their field, it really inhibits our ability to believe their profile of their USPs relative to the rest of the market. And then just a range of other things like being able to sort of justify their assumptions in the forecast. So we really need to back people who can absolutely nail every single question with confidence, with passion. It provides us with confidence that the people that we're backing are experts, and they're experts that have been able to identify an opening in the market that they've got the capability to then go and execute. So for us, it's about knowing your market, credible, and being passionate about it.
Thank you, Mark. How about you, Chris?
Yeah, I guess we're 3 for 3, so I'll keep mine succinct, which is, somebody that's coming to you with a problem, and it happens to be you can solve this problem with a space technology. I'm much more leery of somebody that's a space geek and they've got a neat technology and they want to bring it to market. The first one, there's a much higher probability of success. The latter scenario, you might find success, but you might find that you got hoodwinked by engineers excited about technology.
Thank you for that. And I appreciate all of you being succinct on this. I'm going to take one more question and convert it into a sort of quick, short response, sort of true, false, if you will. And it's a topic that I think many of us have thought about and addressed in the past, which is from Walt Anderson. Do you have thoughts or do you believe that HAPS platforms or high altitude platforms, which presumably can operate at costs lower than dedicated space-based resources, will have an impact or will be disruptive to the various LEO constellations that are in various stages of either deployment or planning? Yes, no, and if you have a strong yes to the yes, no, very short answer. Let's start with Mark.
So yes, I believe that they certainly have the potential to do so. It's a market that we're very interested in. I think that there is a whole range of opportunities where LEOs and HAPS can coexist very effectively. So yeah, I think it's an exciting development of the market. The market is still very underdeveloped. So I don't think that this is something that's sort of happening in the next year or two. I think it's still a number of years away. But yeah, we are excited about that as part of the overall development of this market. We consider it part of the market development.
Thank you, Mark. John?
No, I would agree with Mark. And look, I think there's certainly a high degree of potential there. And when you look at the HAPS alliances and who's behind it, it is interesting to see it's a who's who of terrestrial MNOs, wireless providers, satellite providers, and other brain powers being put behind it. So I think there's a high degree of potential there.
Thank you. And Chris?
Absolutely yes. I think I've done some analysis on the numbers here, and both the performance and the cost basis of these solutions, whether it's in imaging or communications, can be very competitive. I think the issue here is one of, depending on the platform, it's a technology issue. Both Facebook and Google abandoned their efforts, not because they didn't think the business model made sense, but because they couldn't figure out how to keep the plane in the air for the time period and with the mass ratios that they needed. So you've got to solve those problems in order for these business models to close.
Thank you. So in the few minutes we have left, we'll tackle one other question, which is really a macro question, maybe even a bit of a dilemma. So we have seen over the evolution of the commercial space industry a trend from having essentially sovereign, governmental, large multinational entities catalyze the R&D, the growth, the transition from government use to commercial use. And we've now seen essentially 2 or 3 different forces, one being the disruptive forces coming out of institutions of academia, higher learning, in some cases space agency grants and supports, generating new disruptive technologies and businesses. We've also seen billionaires step in and take risks and provide funding that would otherwise be very difficult to do in a commercial market. Are we seeing the waning and transition of sovereign support and of government spinning off technologies into industry, which then is sort of grabbed by industry and commercialized? Are we seeing a transition in that, or is this sort of just a cyclical trend that we're witnessing? And I say that in the frame of a number of countries that are very much aspiring to be spacefaring countries, both on a sovereign and commercial basis, whether it's Luxembourg, whether it's China, whether it's Japan. I know we don't have much time left, but maybe some short views from each of you about whether we're really looking at and witnessing a systemic change, or this is just the maturation and evolution of an industry and it's happening at different speeds in different ways in different places. Why don't we start with Mark?
Yeah, so I mean, I think this is a trend that's really building. SpaceX is very much funded by the US government, which encouraged private investment coming in, measured in billions. You're seeing Luxembourg government making direct investments into planetary resources, the UK into OneWeb. These are pretty unprecedented investments that are taking place at the moment into these businesses. Then you've got things like the European Commission and the European Investment Bank that are setting up space-specific investments. So the European Investment Fund has been given 100 million euros as the pilot to invest directly into venture funds that exclusively focus on space. So this is a way of government encouraging investment in this area in particular countries. So for example, Primo Ventures has launched specifically focused on investing in Italy, leveraging this EIF money. 80% of their investment will be in Italy. So I think there's a huge change there, and this is only really gathering momentum now. I think the other thing that we're seeing is sovereigns as a customer. So in some of our constellation investments, we're now seeing that sovereign countries are looking to acquire constellations of satellites, where a traditional satellite that cost $3 or $4 or $500 million was out of the reach of them being able to access that capability. Now that they can acquire a constellation at a fraction of that cost, these sovereign nations are queuing up in order to be able to actually have this capability themselves. So these nations are big customers for these constellations. So yeah, huge changes and momentum really growing.
Thank you very much, Mark. Noticing that we're just at the top of the hour, John and Chris, just very quick responses if you have any. John, please.
I agree with what a lot of what Mark said. I think the other thing I would add is you look at even things from a militaristic perspective, and the formation of a new branch of the military in the United States. It's going to be important for sovereign nations and so forth going forward. Absolutely.
Thank you. And Chris? You just muted, Chris.
Yeah, I long for the day when this statement isn't necessary, but the role of government and government funding is still absolutely a necessity for this industry. And what I am happy about is the sea change that we're seeing in the contracting type, which is increasingly moving towards cost plus and performance based, not away from cost plus, and towards performance-based fixed price contracts. And, I think that the one that I surprise my friends and neighbors with is I tell them that NASA is paying, a fixed price for somebody that takes a payload to the moon. And they're shocked. And every time I say it, I'm shocked, but it's a good thing for the industry.
Right, indeed. Well, John, Mark, Chris, thank you very much for joining the panel today, and very much thanks to GVF and Satellite Evolution Group and Millbank as well for supporting this panel. A recording will be available soon on the GVF website at gvf.org. And for the few questions that we weren't able to answer, we will do our best to post those on the website as soon as we can. Thanks again to all the audience as well for joining and for your questions. And a reminder to please register for the next webinar, same time in 2 weeks, September 24th, 3 p.m. UK time, 2 p.m. UTC, 10 a.m. Eastern, on global transitions, digital economy, digital infrastructure, connected communities, and digital planet. Until then, goodbye, and thanks again.